I'm very excited to discuss the future of fintech with everyone in the panel. And before starting, just a quick round of introduction. My name is Priyanshu, and I work with Instadapp Labs. Instadapp Labs is we've been into DeFi since a long time, and we have a suite of DeFi applications to make DeFi a more safer and better space.
Yeah, my name is Denis. I lead developer experience at Zetachain. Zetachain is an EVM-compatible L1 focused on interoperability between blockchains. It provides a platform for developers to build omni-chain dApps that can span all the chains, including Bitcoin.
I'm Bharadwaj. I'm usually called AJ for people like Molly to call me better. And I'm the Chief Business Officer with Server Labs, the creators of MOI, the world's first context-aware value transfer network. I'll tell you why I call you a value transfer network later on.
Hey folks, Molly McKinley. I lead engineering and research at Protocol Labs, where I get to work across IPFS, Filecoin, libp2p, which Filecoin has now the FVM and a massive DeFi ecosystem working between storage providers and token holders for lending and staking and yielding. And then there's a ton of use of IPFS actually across the whole DeFi ecosystem, hosting all of the DeFi front ends in a decentralized kind of trustless medium so that no centralized party is operating those DeFi protocols. The back end is on chain and the front end is on IPFS.
Hey everyone. My name is Bashar Lazar. It's first of all a great pleasure to be here. I am with the Aptos Foundation leading our ecosystem and grant efforts. For those that don't know of Aptos, it is one of the latest and most recently launched general purpose high throughput networks coming out of the ashes of the Libra development within Meta. It has achieved today some of the highest metrics in scalability, throughput, latency, and finality across chains. And we have now been live for a year, and we're actively looking to collaborate and support ecosystem projects looking at building the next generation of Web3 applications.
So let's start from where we are right now in the DeFi and finance space. What is the current state of finance on the blockchain, and where are we right now?
Yeah, so that's a very broad question. I guess we're kind of just tapping into where DeFi becomes somewhat accessible to end users, but it's not really. And I'm a bit biased, but I think the fact that it's so hard for regular users to even move their assets between chains, to convert assets from one form to another, and keep track of what they have on which chain, like even that is very hard. So a lot of projects are working on making UX side of this more approachable, as well as technical side of things, because try moving assets between chains, right? And kind of that's already a challenge even for seasoned expert, right? In this, sometimes you make mistakes, you use the wrong bridge, and now your funds are gone. Like, that's where we are right now, unfortunately. We're still getting there, but I mean, it's definitely better because now, like in all ecosystems, we have a lot of ecosystems of blockchains these days, right? So it's no longer just a few separate blockchains. We have, I don't know, reliable, relatively reliable stable coins. We have like DEXs in all the ecosystems. We have bridges, we have systems that allow blockchains to talk to each other. So yeah, we are kind of halfway to the system where to a situation where this becomes usable by regular people.
I was going to make the argument that, like, compared to traditional legacy financial infrastructure, we're actually doing surprisingly well. I don't know if any of you have tried to do like cross-country remittances or tried to like withdraw more than $1,000 from your bank account within a day. I have a $100,000 limit on cross-bank transfers that I can make, even for like investments and funding. It's non-trivial. It's not very good in many ways. So I would say from a back-end perspective, a lot of the infrastructure we have in Web3 is already a step above, what is possible and some of the baseline primitives that you expect of Web 2 finance today. That being said, I strongly agree that we need to keep making the UX better, especially in the many new things that people want to do in the Web3 space related to yielding or cross-chain transactions or things like that. But if you've tried to do like cross-bank transfers or other things, it's already pretty bad today. So we're improving upon a foundation that's like not amazing. And so I think we're already pretty good compared to the legacy financial system. And we're now opening up new opportunities and new levels of engagement and user experience that I think can make it much more accessible. And some of those are things around like being able to verify contracts or having good ways to withdraw or kind of like the safety components to engaging in DeFi, which I think are also really important to users and make it much more accessible.
Absolutely. I mean, I tend to agree with Molly a lot. The fact that we are able to generate solve the demand and the supply problem using algorithms itself is a fantastic thing, right? If you, in the traditional way, if you have to transact on an asset, let's say if it's a share price, it has to be based, it had to be based on the demand and the supply on that particular stock, ticker. But today we have algorithms, we have liquid pools. I mean, we have mechanisms in place which need not have centralized organizations, regulatory, norms in place for us to be able to transact, and that itself is phenomenal, right? I agree to your point that we need to have systems, which are going to be better and better. And that's always been the case since we have been written COBOL days as well, right? So that's always been the case. But a big achievement has already been there. We need to, take it further from here. That's what my think.
No, and I think a lot of incredible points that were raised here. There's definitely a clear understanding that we are in a tremendously exciting time where the experimentation, I think, is at an all-time high, where we're seeing dynamics that we could have never tested within legacy traditional finance. And while I definitely agree with Molly's point around the advancements that have already been established against traditional finance, I think that there's also an angle of making the distinction of its accessibility from more established versus emerging markets, right? Where some of the infrastructure is still not there to help onboard the masses as we wish to see it. For anyone that's been, around in this ecosystem for the past 10 years, really the end goal is the billion plus that are still out of the banking infrastructure, the access to self-sovereign identity. And I think that this is where there's still an inequality of experience that exists across different markets. And from a macro perspective, I would say that this phase is still very early. So we're still all here right now in a position where we can help drive and define what the future of DeFi should look like, but more importantly, ensure that it can fully embrace the core values of what Web3 can bring to society in helping elevate access and transparency and censorship resistance.
Yeah, I think, we are already at a stage where the magnitude of transactions that are happening and the permissionless nature, it's really helping a lot of communities, and especially those communities that traditionally did not have access to fintech. Now they're able to, for example, Africa is a great example. They're using blockchain as a means to improve their lives. But okay, let's come to a slightly less exciting part of the story. It's the regulatory space. So where do you think we are in the regulatory space right now? Do you think the governments and the organizations are more accepting towards crypto, or do you think it's still kind of a fight?
So regulation, decentralization, centralization, I mean, they're seemingly antithesis to each other, but actually they are not, because regulation just provides a certain set of framework under which we need to conduct a certain set of transactions so that the participating entities are not left to lurch, right? I mean, that's the basic conundrum, right? The way I look at it is regulation is necessary, but not necessarily in the centralized format. The fear around regulation, around blockchain, around crypto even, is abating a little, but there have been some systems and policies in place, but a lot more is wanting, so that the users, the consumers, the validators, all the participating stakeholders, their interests are protected adequately. We still have to go places, but I think the fear has just begun to abate, and a lot more needs to be done.
I was going to argue that the approach to regulation and also the feeling around blockchain regulation in general differs from a country to country or government to government basis, right? So you have some groups like Japan that have been putting in very useful regulation that does a good job of protecting their users while creating clear regulatory space for crypto to operate and provide services and value to their ecosystem. Awesome, great. They're doing a good job, and I think that's a good exemplar for other groups to follow. The MiCA regulation in the EU, I think, is also pretty good. I think Japan is maybe a little bit ahead in terms of creating even more kind of regulatory definition. But MiCA is also creates clear space for kind of like value-based tokens that are using this for things like NFTs or storage credits or things like that. And then you have other exemplars like the US that are concerned about their capture of the reserve currency status that they've had to date and are trying to be protective of and maybe China historically or over the past 5-10 years has fallen a bit in that category as well, trying to protect their currency's ability to hold their participants hostage within that environment and make it less likely for people within that economy to transact and participate in the financial market, which I think is a bad move long term because you're kind of fighting against progress and innovation, and you're trying to cut off the legs of that innovation by making it harder for members of your economy to participate. But that just means it's going to grow and yeah, exactly, innovate in other markets, and you're going to be behind the curve, and your economy and all of the people within your economy are going to have to exit your market. We've already seen a number of investors and companies moving out of the US because they can't innovate and be part of this amazing ecosystem, moving to the UK, moving to Singapore, moving to other ecosystems that have better policy around this. And so I think it's short-sighted to try and, fight against or kill a technology instead of putting in place clear regulation that makes space for innovation while protecting against the downsides or the risks and making sure that you have good disclosures or you're clearly reporting about the value of your technology to your users or things like that.
Yeah, I couldn't agree more. The migration of talent that we've observed over the course of the last 12 to 18 months has been pretty incredible. But I think the flip side of that as well is that, as you mentioned, with markets that are taking a much more progressive approach towards connecting with the builders and defining clear guidelines that are both consumer protecting but also not prohibitive towards innovation, is we're also seeing builders, since the emergence of DeFi summer, taking a much more structured approach towards meeting the regulators in a middle ground, right? Where it's a little bit less about this degen experimentation and now more about building tools and products that can effectively help make the divide a lot smaller. I mean, we're seeing now very, very cool initiatives around zero-knowledge KYC on chain, segregated liquidity pools, which I fundamentally believe are going to make it a lot easier for us to come to the table together and define a pathway that I think can bring comfort to all stakeholders involved without going into an extreme of limitation and prescriptive policy. And there's already just so much happening there, and I think that we're seeing it with the growing interest around RWAs, real-world assets, and the underlying marketplace, which is something, it's a topic that has been discussed since 2016 and even earlier, but I think we're closer than ever to seeing real materialization of use cases like these. And if anything, every day that goes by, I think that the growth further accelerates and the collaboration can effectively be far more productive. But hopefully, we'll see more and more markets take an approach that is more so constructive and connected with the builder economy, builder communities and economies, rather than prescriptive towards interest protection, which can be very short-sighted, as you mentioned.
Yeah, we've actually seen in the U.S. like there's almost a political divide these days on the willingness to engage and listen to builders and provide regulation. That regulation in and of itself is can be a good thing. It creates definition, it creates clarity, and if anything, right now in the U.S. there's some parties that are withholding regulation that can more clearly define the space for this new ecosystem to be correctly regulated and participate in the economy with like good regulatory protections for how it does so. And so, I'm excited to see Congress potentially putting in place better legislation that can clearly define a regulatory framework for crypto to participate in.
And sorry, just in a final word there, I didn't mean to cut you off, Denis. But consumer protection is just as important of a piece of the user experience as potentially wallet abstraction or optimization of your signing process. It is something that needs to be embedded within the day-to-day experience if we truly and genuinely aim at onboarding the masses.
Yeah, I think there are two types of influences that regulatory bodies have on crypto. One is kind of explicit, where they make laws and make it harder, easier for entities to operate, and the other one is kind of sneaky influence, where it's happening through like stables that are controlled by centralized bodies, right? Like imagine removing these stables from DeFi, what are you gonna get? So we need to take into account both these kind of aspects, and it's even a question, what is more important, right? Companies can move between countries, but like if you embedded your tool, and I'm not saying these tools are bad, but if you're embedded this tool in a system and then you take it out, the whole system might collapse.
I think, it definitely makes sense that regulate, if properly frameworked, regulations can be a way to protect consumers. Moving forward, we as a space have made our set of mistakes, like there have been hacks, and we're learning every single day and we are improving. How do you think we should approach building such that in the future the DeFi space becomes more robust and more resilient and even safer than, let's say, traditional finance?
We have a very strong think behind that. As part of the reason why we built MOI is we feel that the assets need to be very close to the what we call as participants, right? Because the moment we put it on a contract, I mean, which is what most of the EVM-based stuff is, it's liable for honeypot attacks and all of that stuff, right? So if I have the asset with me as a participant and I have a commitment to a DEX, for example, right? And even if someone were to hack the DEX, the asset is still with me and it's extremely safe, right? It's a second level of abstraction, I mean, as we call it, right? So we firmly believe that participant centricity is, provides context, and this context against, we had a lot of conversations on content addressed, right? We tend to believe it is this context addressed which is going to be the next way forward. And so we have a very strong line of thought and thinking behind that.
Yeah, I think to build more reliable systems, we need to kind of take a look at the bottlenecks and the places where things are getting too centralized and too concentrated. The power is getting concentrated in the hands of just a few entities, right? If you have a bridge and the keys are owned by like a few entities, that's a problem, right? If you, for example, again, a bridge, and like you have a contract that is huge, that is hard to audit, that can contain a bunch of mistakes, right? Like that could be a problem. If you have a sequencer for your L2 and it's centralized, that's a problem. Right? So the more things we can move to being more decentralized and community governed through governance, and we've seen good examples of how communities of token holders can govern these systems and make decisions. They're making these decisions very slowly. They're very conservative, but they still capable of doing it. Making these decisions without any kind of centralized authority looking over them.
I was going to flag, like, standards are good, and especially the more that we can set a standard set of expectations for people who are participating in the fintech industry in Web3, and we can meet the key things that are going to keep users safe, are going to help make sure that custody programs or applications, aren't exposing themselves to certain risks. I think having more baseline standards for how we expect wallets, blockchains, DeFi protocols, et cetera, to behave, and the more we audit and have scorecards on how well groups are, we regulate, if you will, making sure that groups that aren't abiding by those expectations are clearly disclosing it to their users, and their users are accepting those additional risks. I think that can help as well, because part of the fear in the FUD right now is that you have some parties that are flying by the seat of their pants, doing very risky behaviors with customer data or customer resources, money, and they fail, they lose it. And that makes everyone else afraid. Oh my God, is the protocol that I'm using, or is the wallet that I'm using, is it exposed to the same level of risk? If we can more clearly segment what risk factor you're taking on across these different tools and applications, what level of protection is expected for each layer, that might help us a bit in terms of clearly setting expectations and having a tier of high security, high trustworthiness applications that are maybe innovating a little bit less quickly, but can then be robust and reliable for onboarding a much wider, less technical population that doesn't want to do their own, KYC of their DeFi solution to try and validate whether or not they're going to be exposed to the next hack.
Yeah, and I would say, if we still align with the thesis that we're still early, that we're still experimenting, and that we don't know what we don't know. I would say, I think, taking that in consideration, the entire ecosystem did an incredible job at experimenting and hacking its way around some of the limitations of operating within distributed systems. But I do think that there's definitely much more to come in creating security frameworks at the lowest levels, really even at the language level, where the development frameworks should make it a lot easier for entry-level developers coming into the Web3 ecosystem to develop safer and more reliable applications. Despite the fact that, yes, standards are evolving and we have much better understanding of what are the risks of engaging into new, different areas of product development and integration across applications, there's still so much more that needs to be developed. And I think that this is where the emphasis around reinforcing the foundations, where Solidity enabled a great degree of adoption around developers through its ease, but it's also opened up a lot of different vectors of attack at the code, and we had to learn again and again and again, and I think that this is going to be an iterative cycle that we're going to continue going through over the coming decades still, and that we've observed already a lot of innovations come through within, whether it was through the transition into languages like Rust. Today, one of the interesting points and that we really aim at bringing forward to the developer community is really the reliability and security at move. And who knows, there will be other languages, there will be other development frameworks that will come through, and that will hopefully enable hundreds of thousands of developers around the world to take more and more calculated risks in experimentation and enabling us to really see the full potential of Web3 across society.
This was a very lovely session, and I hope the audience could gain some insights on the future of fintech. Thank you.